Hey everyone, welcome back to Corporate Decoder. Today we're diving into Totaligent's latest financial report. Buckle up because this one's got a few twists. It feels like they're trying to solve a Rubik's Cube blindfolded. In this video, we will decode Totaligent's Form 10Q, a report where public companies tell everyone how they're doing. It's like a school report card, but for grown-up businesses. But before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join the discussion. First off, this is a Form 10Q, meaning it's a quarterly report, not the big annual one. This particular report covers the first 3 months of 2020-25, ending in March. Totaligent is based in Boca Raton, Florida, and their main business is digital marketing. They help companies and political candidates manage their online branding. They are a small reporting company, meaning the rules and requirements for their filings are a little less strict than for larger corporations. Alright, let's get into some numbers. For the first 3 months of 2025, they lost $318,700 that could have been for the common shareholders. That's compared to a loss of $127,827 and $890 this year than last year, so they're losing more money this year than last year. Remember, these losses are what's available to shareholders. That's what they could have earned. They haven't changed their share structure much. They are steady at roughly 21 fund of million shares. That's really important information for figuring out how much each share of the company is worth. If we divide losses by the amount of shares, each share is roughly worth $0. Let's glance at the overall financial health. Their total assets are nearly $350,000, which is up from around $223,000 at the end of last year. On the other hand, their total debts or liabilities are very big, a scary $2,027.3, up from $1,960 and $170 at the end of last year. When your debts are way higher than your assets, that's generally not a good sign. It usually means they owe more than they own, which can lead to a world of trouble. They had about 168,776,770 Su, 22 tafais in cash, which is a significant increase from the nearly 22,000 when Wendy has what they call shares to be issued. And it's hard to tell exactly what that means. The company reports revenue of $0 in the period, compared to roughly $340,000 the same time last year. That's a dramatic drop. Something is not good there. This probably goes in hand with their cost of revenue, which dropped from $328.20 last year to literally nothing this year. This has impacted their gross profits, which went from roughly $12,000 last year to literally nothing this year. This has impacted their gross profits, which went from roughly $12,000 last year to literally $8.06, $20 last year to literally nothing this year. This has impacted their gross profits, which went from roughly $12,000 last year to literally nothing this year. The legal fees are a little bit lower this year at roughly $5,500, whereas last year was roughly $6,500, so they didn't need as many lawyers this year. This is probably not significant. General administration went up to $72,000. It was at $61,000 the previous year, but it is probably not significant. Dollar administration went up. Tuvidigy was yeah, but it is probably not significant. General administration went up to $72,000. It was at $61,000 the previous year, but it is probably not significant. Looking at other income and expenses, interest expense is only slightly up. This year is roughly $13,700, while last year was $11,300. However, the change in the fair value of derivative liability $336 for Totaligent. Last year, it caused a gain of $43,000 in the period. We call them DAFALs on over $5 to $5 in dollars. Headworking 30 gain of $43,997. The company recorded a loss on disposal of assets in the amount of $18,007. What that means is an accounting calculation basically came back in their favor last year, but this year it went against them. Also in that section, the company recorded a loss on disposal of assets in the amount of $18,037 in the period. Taking a peek at the cash flow statement, operating activities used up $7,400, $918 in cash, slightly more than the nearly $72,000 they used last year. Investing activities used up approximately $8,400, while last year used $16,400. This is probably due to a reduction in software costs. Finally, they made roughly $230,000 on financing activities, which explains why their cash went up. This all implies that the company is relying on financing activities, which explains why their cash went up. This all implies that the company is relying on financing activities, which explains why their cash went up. This all implies that the company is relying on financing activities, which explains why their cash went up. This all implies that the company is relying on financing activities, which explains why their cash went up. This all implies that the company is relying on financing activities, which explains why their cash went up. This all implies that the company is relying on financing activities, which explains why their cash went up. Totaligent has going concern issues, which means there is substantial doubt about the company's ability to continue as a going concern within 1 year. To try and fix this, the company will need to raise additional funds and implement their business plan. To be clear, this isn't me saying this. This is what the company themselves are saying about their own business. This company isn't making enough money to continue operating, and they will likely run out of money. This is very important for shareholders. During the first 3 months, the company issued 38,187,500 shares from the Treasury in connection with the conversion of just 38,181 that offset paid-in capital, which is like cash, and retained earnings, which is like a bank account where the company keeps its profit, had a negative balance. They have a lot of convertible notes. It looks like they borrowed approximately $900,000 from different people or entities with interest rates from 6–10%. Most of the notes are convertible into common stock at roughly 4,000,000, and a large portion are in default. They have a derivative liability, meaning there are contracts that could change in value based on something else. Think of it as a bet. These contracts are worth 13,391 nons and indexed to 21 million shares. There was one subsequent event after the quarter ended. They entered a standby equity purchase agreement. Basically, it is an agreement to sell up to $3 million in shares of the company. However, a prospectus was filed for 100 million shares that may be issued. This could dramatically decrease the value of the common stock. So, putting it all together, Totaligent is a company that is facing some serious challenges. Sales have dropped, expenses are still high, they're taking on more debt to survive, and they're talking about issuing a ton of new shares which can dilute the share value. They need to seriously turn the corner on sales and marketing in order to stay viable. Alright, that's our breakdown of Totaligent's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.